Hello traders, it's Thursday, October 17th, and we are all waiting for the European Central Bank to announce its third rate cut today. It might be another 25 basis point rate cut, but this will not be the only key event today. US retail sales, initial jobless claims, and Philadelphia's manufacturing business index will be also out later today. So this video, I'll briefly explain my technical view on Euro Yen, Dollar Loonie, and Gold. Starting first with Euro Yen, we can see that the pair has been on the sidelines over the past 10 days. And basically, the euro currency has been on the back foot against a couple of major currencies, but against the Japanese yen, it has been more stable, probably because the Bank of Japan is still uncertain about the timing of its next rate hike. So that's probably providing support to this pair, and we can see that the euro yen has found support around this ascending trend line coming from mid-September and near the 38.2% Fibonacci retracement of this down leg at 162.40. So that makes us wondering whether a new bullish wave is might take place during the coming sessions. If you look at the technical indicators, though, those are providing discouraging signals. They are all facing weak momentum. However, if you look at the simple moving averages, the 20-day moving average has crossed above the 50-day SMA, so that is an encouraging signal that this upward move from mid-September may continue. However, to confirm that, in order to officially call a bullish trend reversal, the price should close above the 200-day moving average at 164.40, and perhaps more importantly, close above the 50% Fibonacci mark of 164.19, in which case the price may accelerate towards the next resistance within the 166.80, 167.37 territory, where the 61.8% Fibonacci as well as this resistance line over here are both placed. Now in the event of a bearish correction below the support trend line and the 20-day moving average at 162.40, we may see additional declines, probably towards the 50-day moving average and the 160.27 number, where this falling line is located, while below that the 159 mark could be the next destination. Now turning to Dollar Loonie, the pair had an impressive rally recently. Had an almost basically it was a vertical rally up to 1.3837, but since then the price has been on the sidelines. It has printed two bearish candlesticks over here, which signal bearish correction or perhaps some consolidation, despite the price currently trying to rise above the 1.3780 resistance zone, where this line over here coming from October 2023 is placed. If you look at the RSI and the stochastic oscillators, the indicator seems to have peaked in the overbought zone, so that suggests some weakness in the coming sessions. So if the price pulls below 1.3780, I expect the 1.3725 and 1.3743 region, where the 61.8% Fibonacci mark of this downfall, as well as this constraining ascending line from February 2024, are both placed. So if that place proves easy to pierce through, then the sell-off could stretch towards 1.3660 and 1.3680, a break of which could take us further down to 1.3620. In the opposite case, if we finally have a bullish cross above 1.3780, the next resistance could come near the 78.6% Fibonacci of 1.3830, which is the price attempted to close above it back in mid-October. If that proves easy to overcome, then the next barrier could emerge somewhere between 1.3870 and 1.39. And finally, looking at the gold, the precious metal is moving up again. It's basically trying to print a new record high above the previous peak of 2,685. well, according to the technical indicators down here, the precious metal seems to be trading within overbought levels. So I would rule out a downside move or a shift to the sidelines. Nevertheless, if we close above 2685 clearly in the coming sessions, then I expect an advance towards 2745, where the upper band of this bullish channel is located. And I'm actually optimistic about continuation to the upside, because it seems that the precious metal follows the Elliott wave pattern, currently trying to chart the final wave 5 before it shifts to the sidelines again, as it happened over here. Now, in the event the price pulls lower, well, the 20-day moving average may act again as support near 2647. The lower boundary of this channel at 2630 could also protect the market from additional declines. If not, the price may next stop near the 2600 round level, a break of which could confirm a bearish continuation and perhaps the completion of a bearish double top pattern. So any move below 2600 may cause stronger selling pressures towards 2560 and 2535, where this dashed support trend line, the 38.2% Fibonacci mark, as well as the 50-day moving averages are placed. So that's all. That's everything I wanted to share with you guys. If you liked my video, please subscribe to this channel, and I will be back next week for more technical analysis. Thank you for watching, and see you next time.